All right, perfect. Good morning and good afternoon, ladies and gentlemen, and welcome to today's Katch webinar. We are very excited to have you join us today for an insightful presentation of our new fund, which is the Katch European Real Estate Partners Fund. So it's Katch European Real Estate Partners Fund. It's a pretty long name. So internally, we usually just call the fund KEREP, based on its initials. So KEREP is our second closed-ended investment vehicle with a duration of 4 years and an expected net return for investors of 20% per year. So it's 20% per year for 4 years. My name is Pascal Rohner. I'm the Chief Investment Officer of Katch Investment Group. Some of you might know me, and I'm going to be your host for the session today. Joining me today is Youssef Sbai. Youssef is the portfolio manager of the fund, and he's going to provide us with insights about this remarkable investment opportunity. Please remember that the idea is not just to have a one-way presentation. So we are happy to answer your questions at the end of the session, in the Q&A session. Just type in your questions, please, via the chat or the Q&A tabs that you can see here in the Zoom application. And before I hand over to Youssef, let me just give you a very quick update on Katch Investment Group. I think most of you probably know the group. We currently manage about 870 million in assets, US dollars. We have 8 different strategies. We have been focusing mainly on private debt via fund structures in Luxembourg. So we have a SICAV RIPE fund structure. I'm saying private debt, but actually today we're not talking about private debt. Today we're going to talk about our first equity fund, which we believe it's very complementary and a very unique opportunity in the current environment. So in Katch, we have 4 offices. We have grown a lot recently in terms of our employees. So I'm happy to announce that we have now more than 50 employees actually across our offices in London, Panama, in Brazil, and in Switzerland. So with this, over to you, Youssef, with a short introduction on the fund. And then afterwards, as I said, we're going to go more into question and answer mode. Over to you, Youssef.
Thank you, Pascal, for the introduction. Hi, everyone. I'm very happy to present you KEREP Fund today. As Pascal said, it's our first equity fund. It's a closed-ended fund. So also it's our first closed-ended fund in terms of real estate structure, as we usually have only open-ended funds so far. It has been launched in July 2023, and it's focusing on value-added investment opportunities. We have 3 sub-strategies related to this fund, which are renovation, so refurbishment, conversion of assets, and elevation. And we are targeting 3 main geolocations across Europe, which are France, Spain, and the United Kingdom. In terms of funds target return, we are targeting 20% IRR net to investors, an equity multiple of 2 after a 4-year life cycle of the fund. And we are looking into growing this strategy to a total capacity of 300 million euros. In terms of management fee, we're charging 2% per year with a performance fee of 20% paid at the exit, which means at the end of the life cycle of the fund after the 4 years. I will just show you, if you can, Pascal, move to the map. So you can show, I can show you the different locations that we are targeting. So in the UK, we're targeting prime markets, so mainly London and prime areas of London. In France, we're targeting prime markets, Paris, so prime cities like Paris, Lyon, or Marseille, but also what we call niche high-end markets like Megève, Courchevel, or Saint-Tropez. In Spain, we're targeting Madrid, Malaga, Barcelona as prime cities and prime markets, and Marbella as one of our niche market that we're looking to expand and develop our investment in Spain. So I can move, yeah, thanks. And then in terms of sub-strategies, as I said, we have 3 sub-strategies. So the first one is refurbishment, consisting on renovating, refurbishing, or extending existing properties in prime markets or niche markets. This is a very high potential return strategy with a low downside risk, as we are acquiring existing properties in liquid areas at a discounted price compared to their market value. We are focusing on project durations of 18 to 24 months, which are a very short-term project, allowing us to benefit from the dynamic of this market. The second strategy is the elevation strategy, mainly applicable in prime and big cities like Paris or Madrid, where there is a lack of plots to develop and the shortage in terms of housing and residential units. So here the strategy is also providing a high potential return with the controlled risk, as we are acquiring again here existing building that we are looking to elevate through a wooden structure or a metal structure. Project duration here is a little bit longer, so 24 to 30 months, due to the complexity of the project, as we need to conduct a deep technical survey to ensure that the building has the ability to welcome an additional floor and ensure that the structure of the building is allowing it. The second complication here is also the administration process, as we need to get obviously a building permit and a different authorization to be allowed to build an additional floor or two. The third sub-strategy and the last one is the conversion. So here conversion, we're talking about converting commercial buildings into a living or residential building. To give you an example, with the current economical situation in the current market, basically it will consist on targeting obsolete office buildings in secondary location, acquire them, turn them into residential or living building, and then sell them to end buyers, so for investors. This is a strategy with a great area of opportunity that is also highly scalable and very well welcomed by cities, by mayors, because it allows them to renew their existing obsolete building, and it's also in line with the ESG and sustainability policy for the city. So that's it for me in terms of introducing the 3 strategies and the fund vision and strategy.
All right, wonderful. Thank you so much, Youssef. So you quickly mentioned the current environment. I mean, I guess that some investors might find it a bit surprising that in the current environment we are launching a real estate equity fund, because we are certainly in a challenging market environment, you know, just on the back of the higher interest rates and declining prices in some markets. So what do you say, makes our strategy different from the rest of the market, and how can it achieve this expected return given the currently challenging market environment?
Yeah, thanks, Pascal. I agree. I mean, there are definitely challenges in the current environment and the market. Of course, here there is also what we've noticed during the last year is that there is a huge lack of liquidity with investors, developers. So, and also some of the markets, real estate markets, are declining in terms of prices. However, our strategy consists, as I said, to focus on niche high-end markets. So this focus is allowing us as a fund to invest in high-end residential projects located in highly demanded and liquid areas that are uncorrelated with the current economic situation and benefiting from strong appetite of cash buyers. So we're talking about luxury market where most of the buyers are not requiring a financing, they're cash buyers, and it's a market that is still very active, dynamic, and resilient. The second point is to leverage our capacity as a group, as a team, to partner with local investors and who are experts in this market and within this strategy. These investors are acting as co-investors in KEREP project, as well as local project managers for us. So they're allowing this is allowing all the parties, so which means us as a fund, them as co-investors and partners, to share the same goals and incentive. And this is very important for us. The third point as well to build the business case for KEREP strategy is our origination capabilities and capacity in France and Spain through off-market channels, allowing us to source very attractive opportunities and assets at a discounted price at most of the time. And I think the last point, but it's not the least one, I would say, is the fund's life cycle of 4 years, which is much shorter cycle than most of the value-add equity funds. So as the strategy consists of starting the divestment period by end of year 4 and liquidate the fund in the maximum period of 2 years of extension, I would also highlight the project life cycle that we are targeting of 18 to 24 months, that is allowing us to actually benefit from the dynamic of each sub-market or niche market that we are currently targeting, and our goal to recycle the cash in 2 years, which means that once we exit the current project and deals that we are investing in, we will be able to assess the market and adjust and change allocation of the funds depending on the dynamic of each sub-market or niche market.
Okay,
so
perfect.
That's it for me.
Yeah, makes sense. So I think you mentioned it a little bit, but I mean, I was just wondering whether you can give us some additional reasons why we want to focus much more on the high end and niche market rather than just, you know, the standard real estate projects.
Sure. I mean, in addition to what I just said, I can give you 5 core reasons to focus on high end and niche markets. So first one, I would say that these markets are, as I said, are uncorrelated with the current economic situation. Demand is most of the time exceeding offer in this market. So there is a shortage of luxury properties. It's very funny to hear sometimes, but it's the case in many markets. If we look at Courchevel, for example, or even Marbella, high proportion of foreign cash buyers in this market. So we have a huge presence of international buyers that are not requiring financing or local financing at least. And then liquidity is proven in these markets as well. Positioned assets sell usually in short period of time. And we can see in some market, they even sell very often off market. So these assets sometimes don't hit even the market that they already sold, because there are some specialized agents that work with some buyers that don't want to buy a property that went into the market and that has been visited by several potential buyers. So a lot of assets don't even hit the market for when we talk about high end and luxury market.
All right, understood. Hey, Youssef. So I mean, it's always interesting to say that we focus on niche markets, but of course, it's not always easy to get access to these type of opportunities. So maybe you can explain us a bit more about the origination processes that we have, and maybe the network that we have in the current market to get access to these type of opportunities.
Sure. I agree. I mean, origination is the key for this type of strategies. So here we focus our sourcing strategy in origination in as much as possible on off-market deals. So which means that by experience are the most profitable deals, as they allow the fund and investor to acquire the asset at a great discount, and therefore from the entry level already start creating profit. In terms of sourcing canal and network, our network is based on our in-house contacts. So we have people in our team in group that are very well connected with decades of experience, but also we are leveraging our local partners and co-investors. So they are co-investing with us in the project. They're supporting the operational side of refurbishing the properties, but we are also leveraging their strong network, usually built over decades, to get access to off-market deals or the off-market opportunities, and obviously off-market assets at a discounted value before even they hit the market. And that's, to me, that's the key point to build a great success for a strategy like KEREP.
All right, perfect. I mean, I was thinking, so basically, I mean, you're saying that, you know, it's a resilient strategy because of the supply demand, a lot of cash buyers, foreign buyers. I mean, it's niche, so there is not a lot of opportunities on the market. So it's possible to achieve interesting returns to investors. But to get to these 20%, I mean, as you explained, we also need to be able to secure funding from banks or from other lenders. Can you maybe give us some insights on the funding strategy on the individual projects?
Sure. As I said, it's very important to have a very good origination process and network. Financing is, again, the second point that I would say the most important point in the strategy success, as based on the level of leverage and the quality of the financing, we can make a strategy successful or not. So here we work very closely with banks and debt funds in France and Spain who are interested by financing our projects. We have already managed to secure bank financing for one of our latest investments in Paris at 70% LTV, and the debt financing in Spain for another project at slightly under 60% LTV. So just to say, it's a constant work, as we are every day developing new partnerships with international banks and lenders who understand our niche position, which is very important. They need to understand our position, our projects, our strategy, in order to secure financing for all our current and future projects.
All right, perfect, understood. So maybe just to clarify, so we basically launched the commercialization of this fund. I guess it was in September, August, September, something like that. So we already have 15 million in assets under management, and the fund is still in fundraising with the first close in January 2024, and then it's still going to be open for fundraising later. But since we already have 50 million in the fund, of course, investors, they have an idea of the target asset allocation, as you said, between the three strategies. Also, you know, the areas, UK, Spain, and France. But you mentioned that we already secured funding. So it basically means that there's already, you know, some deals are already in the portfolio. So maybe you can give us some examples just to understand a bit better what exactly we are doing in this fund.
Of course, I can give you two examples of actually live projects that are ongoing under refurbishment. So the first one is a mixed-use building located in central Paris that we acquired through an SPV owned at 50% by KEREP, with the strategy of renovating the building as well as elevating in it, so adding an additional floor. So this is the typical example that combines two strategies. So the first one, which is refurbishing an old obsolete building, but also elevating it. So we're adding a little bit more than 100 square meters on a new additional floor. For this specific investment, KEREP injected 2 million of equity out of a total envelope of 3.8 million euros of equity. It's a project duration of 16 months, as we are combining in the same time refurbishment, elevation, but also the pre-sales of the residential units through an off-plan sale process. For this specific project, we secured a bank financing. We have with the bank, there is a local bank that provides us with 9 million euro financing for the acquisition, as well as for the refurbishment facility at a very competitive interest rate. So we have Euribor plus 2.25%. On this current market situation, it's almost impossible to achieve. And our net target IRR after tax for this specific deal is 23.7%. Regarding the second deal, so the second example here, it's in Marbella, Spain. It's a property of 700 square meters built on a plot of 2,000 square meters, located in the Gulf Valley of Marbella, which is called Nueva Andalusia. So we are in the heart of Nueva Andalusia, so very demanded area. And here the strategy again is refurbishing the asset, enhancing it, and upgrading it. So which means, what I mean by upgrading it and enhancing it is turning this early 2000s Andalusian style house into a modern house, and upgrading it with modern and high-end spec facilities like an internal pool, a spa, a gym, a sauna, a hammam. We have also a plan to install a private cinema and an entertainment room with a private bar. So it's really a house that comes with a package of all the amenities and the most modern demanded installations. So here, in terms of equity, KEREP injected 600,000 euros of equity out of a total envelope of 2 million euros of equity. Project duration is 12 months, so 8 to 9 months of refurbishment. As here, we don't require any license. It's what we call in Spanish declaración responsable, which we're consisting on paying the tax to the city hall and starting the second day to work. So it's very easy to start and to launch very quickly the refurbishment and then save a lot of time. So here, the debt we secured as well, a debt financing. So we had a local lender that provided us with the 2.9 million financing for the acquisition, as well as 100% financing for the refurbishment facility. So here we are talking about a higher return, as we are in a very, very specific niche market where origination is very complex. Securing several deals like this one is very complex as well. So we have a net target IRR after tax of 48.8%.
That sounds very attractive. 48.8% looks like a very attractive deal. So, so just to remind you that you can ask questions via the chat and Q&A tab related to the examples, the fund per se. So let me quickly check whether we have already some questions coming in. So far we have 2 questions. Question number 1 is, how do you plan to calculate the NAV of the fund? So how are you gonna value basically the projects?
Yeah, thanks, Stefan, Pascal. So this is a very good question, because here we are facing some complexity in terms of valuation, because we're acquiring existing properties, we're injecting capex, so the value of the asset is changing over the life cycle of the project. So here the NAV will be calculated every semester, and the variation will be driven by the valuation of each asset. So we combine it to get the NAV of the fund. There will be a red book valuation conducted by a top-tier risk valuation company, providing an as-is value based on the residual value of the asset, which means that we will look for every semester the residual value of each asset, depending on the capex injected and the progress of the work. But in the same time, we will also get an update of the gross development value of each asset to confirm the exit assumptions that are remaining unchanged, and that we are very comfortable with our exit prices, which allows us also to keep a control and to constantly assess the market dynamic and market changes for each location, and obviously combine it through the portfolio to get our NAV for the fund.
All right, perfect. Thank you, Youssef. So we have 2 questions. They are more or less on the same topic, and it's related to the subscription process and the fact that we have different capital call dates and different share classes in the fund. So maybe this might be a little bit confusing. So maybe I try to explain it myself, Youssef, if you agree. So
Sure,
actually, we have a commercial presentation, but we also have a fact sheet that is available on our website, where you have a bit of details related to the process in terms of the subscription, how the subscription works. So what we decided to do is basically we have two windows in terms of fundraising. Window number one is gonna close, as I said, at the end of January. So the advantage for early investors is that if you subscribe by the end of January, the subscription fee is 2%. For investors that come after January, so starting February 2024 to August 2000, I think it's July 2024, the subscription fee is gonna be 6% instead of 2%. So there's gonna be an advantage for the ones that invest earlier, as we are building up the portfolio. And later investors, of course, they will have, the portfolio is going to be more diversified already. So the subscription fee is going to be a little bit higher. Otherwise, the subscription works exactly the same as we have in our other funds. So it's part of our Luxembourg umbrella fund that we have, Katch Fund Solutions. It's just another sub-fund. So investors that bought any type of other funds with Katch Investment Group here, it's exactly the same process. It's usually available in different platforms, custodian banks, clearing platforms, and so on. And there are different IC numbers. So we have 3 different currencies. We have US dollar, euro, and Swiss franc. And then we have 3 different ICs for the early subscribers. And then we have 3 different subscribers for the later subscribers. So overall, we have 6 different ICs for the fund. But if you have specific questions about in which platform, which bank, and so on, don't hesitate to contact your sales representative or myself or Youssef to help you and to assist with the investing process. All right, perfect. You want to add something, Youssef?
No, I mean, it's very clear. Just to maybe get back quickly to the subscription, and the reason why we set up 2 different subscription costs as well is that we are already creating value since the launch of the fund. So we need to be fair between the early and seed investors and investors coming later. So that's why we decided to structure it as 2 different periods. But yeah, except that, please, as Pascal said, feel free to reach out to us if you have additional questions regarding the strategy, and we'll be more than happy to provide you with additional info and details regarding our current portfolio, but also regarding our pipeline, which is quite strong already and growing very fast. That's it for me.
All right, perfect. I mean, we have some questions related to the fees and trailers and retrocessions, but unfortunately we cannot answer the specific questions on the webinar. So let's just take it up bilaterally when it comes to to the compensation of intermediaries and so on. So we can take this up bilaterally later on. Perfect. All right. Thank you so much, everyone, for your attendance today at the Katch webinar. As Youssef said, and myself, we are available for further discussions. Just reach out to us. Very happy to do a deep dive into the current projects and the strategy of this fund. We are very excited about it. We know it's not an easy environment for European real estate right now, but as I always say, if there is a challenge or a crisis, it always creates a lot of opportunities. So we have to focus on the opportunity side and not on the problems. So we believe now it's exactly the right time to invest in European real estate if you focus on specific areas. So very excited about it. And thanks again for your attention. And hopefully we can have a discussion very soon. Thank you so much. And thanks again, Youssef, for the presentation.
Thank you. Thank you. Thanks, everyone.